Not many questions in the past have been on consolidated cash flows. So we don't know if they are ever going to set it for the diet. But like I've said, we have to prepare our minds, prepare ourselves for every when it comes to this paper and generally this exam. Okay. And that is why we must do our best to ensure that we fire on all cylinders and we know what we are doing. All right. So quick revision on consolidated cash flows. This topic or this standard in itself is not new to us. The only thing is that at this level, because it's a consolidated cash flow, there will be other items that are somewhat different from what you used to have in FR. So we must have learned this at the level of FR, because to do CR, you must have done FR. And at the level of FR, you would have been taught cash flows. So cash flow is not new to any one of us. However, what may be new is the fact that we are doing it from the perspective of a group. And a group would mean that we are looking at not just the parent, we are looking at the subsidiaries of the parent, we are looking at the associate investment of the parent, we are looking at the non-controlling interests as well of the parent. So in the transactions that have taken place between these members of this one group, there would have been movements of cash, and we said in the same be eliminated. That's it about cash flow. However, what we are really at the point dividend, you may not have captured that when you were doing your accrual accounting. And the simple reason is you would have done carrying amount of NCI, and to measure NCI share of profits. Now, we never bothered ourselves, but however, that share of profit you were taking, you didn't consider whether dividend was paid or not. In the event that dividend was paid, then you would have to reduce the debt. So you will see us do a sort of walk back so that we can come to a position where we'll be able to see such dividend paid. So it's more or less a walk back that we'll be doing. Also at the point where acquisition of, I'm trying to pull up the notes. I don't have it on this system. So I'm trying to pull it up. It's taking some time to load. All right. But continue and wait for it. Now, in the mode of revision as well, we made mention of that. Another thing that we made mention of was the fact that in the transaction that must have taken place at acquisition, a transaction that must have taken place at the level of acquisition, that there must have been cash movement as well. Cash must have been paid. Also, not forgetting that cash could be one of the assets that was acquired. I said in this instance, the acquisition, typical question will give you the breakdown. You know, before now, we'll just look at the net asset that was acquired. That net asset that was acquired, expect the examiner, if they are going to set cash flow, it will be part of the notes. They will break it down. You're going to see the assets, you are going to see the liabilities, because you are going to be that the element of cash in the movie. So essentially, you must pay attention in associates. There's also the possibility that the associate has paid dividend as well. So in your equity accounting, you would have measured that carrying amount the way you have been doing it. You would have seen that we will normally say that the historical costs that you bought, or that you invested in the associate, then we are going to add up the share of profit in associate. Now, in adding up the share of profit in associate, we didn't give credence to really whether dividend was paid or not. But if dividend had been received from the associate, what you do is to deduct that dividend from the carrying amount. Also, there could have been impairment and all of that. We saw that when we were treating investment in associates. All right. Now, all of this will come to play as we learned in IS 7 under FR. When you were dealing with FR, all of those things will remain. It's still the same thing. That simple cash flow you learned is the same. The only thing is that these additions have been added. These additions have been added to the whole mix. All right. So not to waste time at all that we have before us. First of all, let me go like this route. We should have the question is sent to the group. I'm wondering if we can have a way on our own. We don't have to do screenshots or to have access to the question, so I can move straight into solution. Except to say there's no way for you to follow, then I'll now be forced to find it because it's not even on this system. It's on my phone. So that my question will be this: do we have any problem to in terms of access to the question? I started using Excel to solve for the FR students, and I have since enjoyed it. It gives me the opportunity to even be able to say, you know what, the solution can be sent to you much more easier. I don't have to go back to the same question trying to solve it. All right. So I'm going to read the question. I hope you have the question. I dropped it on the group. I hope we have no problem with the question. All right. I'm going to assume that your silence means that you have no problem with the question because I've sent it to the WhatsApp group already. All right. Let's go there. Feed Me is the name of the company that we are dealing with. Feed Me Limited. Now let's read Feed Me Limited. Okay. Uh, Sorry. Just so that it doesn't look like I'm reading from thin air. I feel the need to still, what is it called now? To still share it and read across. ICAN Professional Made Diet 2021. I may need to re-download here. All right. We're told Feed Me Limited is a company that has been in operations for over 2 decades, producing Trobomau, whatever that is. They said it's a natural beverage. So the company acquired 100% interest in Butane Nigeria Limited, a company that specializes in the importation of cocoa beans from Cote d'Ivoire. In 2016, Feed Me Limited acquired 40% interest in a competitor company, Foodco Limited, and on January 1, 2019, it acquired, I need place where I can plug my charger. It acquired 75% interest in Shawarma Supermarket Limited. All right. Coming. The draft consolidated statement of Feed Me Limited Group as follows. First of all, we have draft consolidated statement of financial position as at 31st December 2019. And now we have a comparative year 2018. Give me the charger. Laptop. All right. Laid out is the non-current assets, current assets, the equities and liabilities. All right. Now we also have a draft consolidated statement of profit or loss and other comprehensive income for the year ended 31st December 2019. All right. Moving on. Additional information. We are told that there had been no acquisition or disposal of freehold buildings during the year. All right. Before I even read additional information, let me see what we are required to do. I always say you should read what you are required to do first. So what you are required to do is to prepare consolidated statements of cash flows for Feed Me Limited. All right. For the year ended 31st December 2019, in accordance with IAS 7, using the indirect method. Okay, using the indirect method. All right, let's go back to the additional information we're given now. Additional information number 1, which I read earlier, had told us that, there had been no acquisition or disposals during the year. Now, information relating to the acquisition of Shawarma Supermarket Limited is as follows. Okay. Plant and machinery, trade receivables, cash and cash equivalents, trade payables, the income tax. Then we have NCI. Now, I already told you that this will always be given to you. Never forget that what they are trying to do here is same way you would normally calculate goodwill. But the aim is not to show you goodwill. The aim here is to give you the breakdown of the assets and liabilities of the company, the subsidiary that was acquired, so that you can have those breakdowns when you are doing the movement of assets and liabilities. You will not be doing just that of the group. You will also be doing that of the company which they have just acquired. Most of the time that company has just been acquired. That's why they are giving you that breakdown. Okay. So when you are running the movement, you will need those asset numbers and those liability numbers. So it's important that they break it down for you like this. Okay. We saw that in the question we solved in the last class as well. So I don't expect it to be a problem. Okay. Also, last additional information, there's a loan notes. Loan notes were issued at a discount. Loan notes were issued at a discount. All right. In 2019, and the carrying amount of the loan as at December 31st, 2019, included 600,000 naira, which represents the finance cost that is attributable in respect of the current reporting period. All right. What they are saying here is that inside your finance cost, there is a 600,000 naira that is attributable to this loan notes, this specific loan note. I'm sure when we look at the statement of financial position, we are going to see that loan note there. This is the loan note they must be referring to. All right. Okay. Now let's go into solving. Let's go into solving. Like I have said, or I have reiterated a few times, that the way to go about consolidated cash flow is not so different. Is not so different from that of a single or independent company. The only thing is that we have some typical transactions for a group that would not have surfaced at the level of individual company. All right. So let's get started. Usually we'll start from the level of the PBT. All right. The PBT we were given, profit before tax. Now, if you look at this, the profit before tax we were given in this question, sorry, the profit before tax. I believe you can see the whole of my screen even when I move from one application to the other. That's why I'm sharing the whole of my screen. Is that the case, everybody? When I switched like this to Excel, can you see my screen?
Yes, sir.
All right, good. Okay, good. So our profit before tax is 28,275. Profit before tax 28,275. Is that correct? Yes. All right. Now we need to make the first thing we normally do is to make adjustments for non-cash items. Now, let me quickly tell you the secret. The secret is this. It's not just non-cash items you are adjusting for. It's a double-edged sword. This adjustment. This adjustment is also for items that are not supposed to be part of the operating activities, that are incomes or expenses that you have modeled together when you were doing your income statement. So a good example would be things like profit or losses that came from the disposal of PPE. Now that income is not part of your primary activity, so therefore it's not an operating activity. So what you would do is to first of all adjust it, take it away from your operating activities, and then you now pick up the cash element, the cash receipt, actual cash receipt on disposal, and put it in your investing activity. All right. Now, I also want to believe that in this class After the class we had 2 weeks ago, we shouldn't have a problem with classification. Even the standard did not say some classifications have to be, some things have to be in a particular place. Just have your own guidance. I've said it. If you are dealing with operating activities, you're looking at uh, you're looking at the income statement to make some of these adjustments that I'll be doing now. You're also looking at the movement of the current assets, the movement of your working capital. All right. The only current asset we will not touch per se is going to be the cash and cash equivalent. And then if you have um, income tax in your current liabilities, you won't touch that yet. You will do it to try and get the tax paid. You see how we are going to do it. All right, let's get started. Let's get started. Part of the things I should make adjustments for, part of the things I should make adjustments for is the interest expense. Why interest expense? The interest expense is an accrual of the interest that we ought to pay during the year. All right. And they will usually call it finance cost. They may not call it interest expense. They will largely at this level call it finance cost. All right. Let's look at the finance cost that we have here. Okay, yeah, good. Interest expense. They even call it interest expense explicitly. So we made a deduction of interest expense before we arrived at 28,275. So what will I do? I will add that back, 2,250 to be an add back. All right. Right there and there, I can also see that there is a share of profit. There is a share of profit, a share of profit from associate, share of associate profit. I can see it here. Now, it is not the share of profit that counts as much as the dividend we must have received there. So I'll say share of profit or share of associate profit after tax. And how much was that? 5,250. Now, this was an addition to our income. So in my adjustment, I am going to make a deduction from it. All right. I'd rather make a deduction from it. All right. What else are those items that I need to deal with here? Not much is on the face of the income statement. All right. There must have been depreciation. Depreciation is probably lying somewhere inside the cost of sales, or if you have admin expenses. All right. Okay. But what did the question really say about depreciation? I saw that additional information number one told me about freehold buildings. Said there had no acquisition or disposal there. All right. Okay. If there had been no acquisition or disposal, then there's one suspect left that could have caused a movement on the balance of the freehold building. And what is that? No other thing than depreciation. So let's look at the freehold building. Oh, yes, we can see that the balance reduced from 33 million to 31.125 million. All right. So what I would do is to say that this reduction must have come from depreciation. So number one, I can say depreciation on freehold building. All right. Now my freehold building balance brought forward in 2018 was how much? It was 33 million. It was 33 million. So if the value, if I had no acquisitions and I had no disposals, They are trying to make life easy for me. They are telling me there was no acquisition or disposal in 2019, between 2018 and 2019, and the value had dropped to this. It could be one thing that led to the drop in the value, and that's depreciation. So depreciation would have caused that. So this would be depreciation. This would be depreciation on. So I can come here and say, I don't want it to be like this. Depreciation on freehold building. All right. Why did it not end up being like this? Okay. No, Allah. Depreciation on freehold building. So you must have deducted this depreciation, and it's a non-cash item. So we are going to add it back. We're going to add it back. So where else could we have had? Is there any other item of PPE there? Oh, there is PPE there. You can see PPE was segmented into its cost element and its accumulated depreciation element. So pay attention to this. To get the accumulated depreciation, to get the depreciation for the year, the additional information, because I need to be careful. First of all, the additional information tell me of any disposal? Because if there is a disposal, I will need to credit it to the cost. The cost is like the asset, and the depreciation is like the liability. So the cost of the asset that was disposed will first of all be deducted from the cost, and then the accumulated depreciation of the disposed assets will also be deducted from the accumulated depreciation. So that can also impact the accumulated depreciation. So two things normally affect accumulated depreciation. Number one is depreciation. Number two is disposal. So far, the question did not mention disposal. So I'll say here, accum depreciation on PPE. All right, on PPE. Okay, I'll just say balance brought forward. That is from 2018. The balance that was brought forward was how much? According here is 16,500. 16,500. All right. Now the balance that was carried forward in 2019. The balance carried forward in 2019 was an amount, is it not 15,000? I saw there 18,000. All right, 18,000. So what would have increased our accumulated depreciation would have been depreciation for the year. Depreciation on PPE, I can say for the year. All right. Now that difference is what would have accounted for this increase. All right, straightforward. So I can say depreciation on PPE for the year, and this will be this on that level. All right. So we have depreciation sorted out. All right. Okay. At this point in time, how much do we have here altogether? Sorry. Let me move everything here.
Hello, sir.
I'm with you, ma.
Okay, please, what of this income from financial assets?
All right. Let me see what they said about financial. Yeah. We have financial assets, yeah. There was no movement on our financial assets. Still held at its historical cost.
No, for
But
the
then we had,
P&L.
yeah, yes, I understand you. Income from financial assets. Hmm. But there and then, I'm coming. So this income that was spoken about here, I'm not sure as to, but okay, it's no problem. I will just reclassify it to financing activity, or rather, sorry, investing activity. So I can bring this down. The scheme of things, it won't have any issue. Okay, income from financial assets. All right, it's also not coming from, thank you very much. It's also not coming from their primary activity. All right, so you can come here, 3,000. Okay, and then now I can deal with changes in working capital. All right, changes in working capital. I begged you before in the last class. I'm going to beg you again. Be careful here, because you must not forget that the examiner gave you the breakdown of the assets and liabilities of the subsidiary that they have just acquired. And let me go back to the question so that you can understand what I'm saying. Which one is, you may be asking, which one is the subsidiary that they have just acquired? All right. Look at the question. It says, on January 1st, on January 1st, 2019, what did they do? They acquired 75% interest in Shawarma Supermarket Limited. All right. Now, when you go to the additional information, they will always do this. Tell you about a subsidiary that was acquired in the year of consolidation. They will tell you they acquired a subsidiary. They will now give you a breakdown. Did you see information number 2? Information relating to the acquisition of Shawarma Supermarket Limited. So that's why I always say be careful around it so that you don't forget these numbers. So that you don't forget these numbers as well. All right, good. And let's move on.
Please, I have a
So now, what did you say?
question on income from financial assets.
Go ahead, I'm with you.
Is it addition or subtraction? Because you said where there
Oh,
is.
sorry. It must have been added. Thank you. It must have been added to the income. All right. So we are just doing a reclassification. We're taking it away from here and we're taking it to financial assets. All right. Thank you. All right. So the first current asset that we're going to see on the face of the SOFP is current assets, inventories. All right. Okay. So I'll say movement of inventories. All right. Now, balance brought forward was how much? Balance brought forward was, is it 15,000? I think 2019 is on the right. Let me see the alignment. 2019 is to the right. 2018 is to the left. Okay. So 15,000. 15,000. Okay. Now, there was that of supermarket. Supermarket inventory was how much? 480. So I'll say supermarkets inventory was 480. So altogether, the inventory should have been this, but our balance carried forward for 2019 is what amount? 27. What did I see there? 27. I saw 29,625. Okay. 29,625. 29,625. So what's the difference between 29,625 and 15,480? All right. So this will be the movement of inventories. So I'll say, I won't call it movement. It's representing an increase. So I'll say increase in inventories. Now, I was also screaming it in the last class, if I recall myself, that when it is current asset, what should you do? You should do the opposite. What do I mean by opposite? Increase is supposed to be a plus, but because an asset, I'll treat it as a minus. Now we can explain that. We can explain that. And I do want you to understand the explanation. But I've also discovered that there's no point sweating it, because for the purpose of your exam, it shouldn't matter whether you understand that minus or plus, as much as you do it rightly. Now, the reason for this, when you have increase in inventories, we see it that you have given out goods that are worth cash, right? So we are still expecting money. Maybe we have not received the money. But when your inventory reduces, sorry, that will be receivable. Inventories means that you have increase in inventory because you would have spent production cost. You would have incurred production cost to have increased your inventories. Now, when your inventories reduces, it means you have sold your inventories and you would have received cash. So your reduction in inventory should be a cash inflow, while an increase in your inventory should mean cash outflow. The same thing is applicable to receivables. If my receivables increases, it's majorly because I have given out cash or I have given out inventories, right? But if my receivables reduces, then it means I must have received some money. All right. So that is the whole idea. But what I used to guide students is, don't worry about it, don't overthink it. The moment you overthink it, you may end up doing the wrong thing. So what you should just do is this: when it is current asset, I'll do the opposite. Just keep that rule in your mind, and that will help you to solve it. Okay. Now let's move on quickly to the next one. Number 4. I think I saw trade receivables there. Trade receivables. Now, trade receivables was how much? Balance brought forward. I'm seeing 19,125. 19,125. All right. Now we'll have that of supermarket as well. That of supermarket, trade receivable is 420. Trade receivable is 420. All right. I can say supermarket here, 420. And now what we should have here is how much? 19,450. But then at the end of the day, we closed out with how much? 27,750. So 27,750 is here. So we must have had an increase because this 2750 we close is higher. All right. So this will be increase in trade receivables. Trade receivables increased. All right. So I'll have here trade receivables increased. Need to be minus this amount. All right. What other current asset do we have? cash and cash equivalent is what we are coming back to. So I will leave that out. Let's come to trade and current liabilities. Under current liabilities, I have trade payables. Okay. So I have trade payables. Let me just copy everything I have here. Now, my trade payables 2018 was 4,200. How much is that of supermarkets? Do they have trade payables? Yes, they do. It's a jacket. One, okay, it's not, okay, that's because it's a liability, that's a jacket. 1,020, right? 1,020. What did they close with? They closed with, they closed with 7.5. So therefore, what we have as increase is 2,280. Now this is payables, right? So I'm going to say increase in payables. I'll treat it as it is. All right. Okay. Now at this junction, I have lease obligation as well. I saw it. I saw lease obligation. But mind you, lease obligation has two elements. So I would rather treat it separately. Look at what I'm saying. The lease obligation is here under non-current liabilities. So it means that it is just the portion of that lease obligation that is falling due within the year that they are putting under current liability. So I think it's best we treat this under, we can treat it under financing activities. All right. Can treat it under financing activities. All right, let's move on. So I will leave out this one. Income tax as well is there. I can see my income tax. This one as well, I'm going to deal with it separately. I'm going to deal with it separately as well. Then I have interest and finance charges. Now this interest here, I'm sure, is linked to the loan notes as well. So I can leave this one out as well. All right, let's move on. So let's add all of this together. What do we get? I get minus 20,070. Now let me move this 20,070 here. All right, okay. And we're almost done. We're almost getting done with the investing, with the operating activities. Let me add all of this. Okay. Now let's go and deal with, this should be number 5. Let's deal with tax paid. All right. How much is the tax paid? Now, also for tax, be careful. Okay, yes, the question has deferred tax and it also has current tax. So deferred tax is usually here under non-current liabilities, and then you're going to see it again under current liabilities. All right, let me just pick up the balance brought forward. Balance brought forward for deferred was how much? The balance brought forward was 395. Balance brought forward for current was how much? it was 3255. So 3 3255. Okay. Now we must have had movement during the year. For current tax, I should see it in the, what is it called? Income statement. I should see it in the income statement, right? All right, before I even go there, okay, income statement says 5/8 income tax expense for the year. Is that much? 5,865. See where I'm pressing it. 5,865. And then we have for deferred tax as well. And then there's tax as attributable to investment income, 675. All of this put together was 810. All right. So I can say eight what? 8,100. All right. To cut the long story short. So do we have tax for subsidiary? Do we have tax for subsidiary? All right. There's income tax here of 255. Okay, we do have. So I'll say for supermarket. Supermarket own is 255. So all of this should mean that my what is it called now? My balance carried forward should have been this amount. But how much do we have as our balance carried forward? Balance carried forward. Now I'm going to be looking at two lines. Don't forget, there is the deferred and there is also the current. Deferred is 450. Current is how much? 6,930. So I can say open bracket. Sorry. I can say open bracket 6,000 what? 930 plus 450. Now how much is that? 6,930 plus 450. That should give us how much? 7,380. Okay, now the difference we have here is a reduction. So what could have reduced our balance? What should have reduced our balance should have been the tax paid, right? So tax paid is this amount, right? So here I have tax paid. Okay, I can bring my tax paid here. It has to be a minus because it's a payment out of. So typically I don't do interest paid at this level. I like to do interest paid under financing activity. But I always beg my students not to forget. But I found out that even I myself, I can be forgetful, but I will try my best and not be forgetful in this instance, all right? Okay, so what I would do
Sorry,
is to say,
sorry, sir, please, can you take the tax pay again, the calculation, the work back again?
okay, let's do the work
Thank
back
you.
together again. Now, these are your the balances you have on your, what is it called now? On the deferred element of tax. Here, you are 395, and here you are 3255. These two amounts, all right? Now, your expectation will be that what will increase my deferred tax and what will increase my current tax should be my income tax expense. All right. Your income tax expense will always include the current tax for the year plus the movement of your deferred tax. Right? We'll be dealing with IAS 12 in our next class. All right. So this thing here you have here is made up of those two things, right? Now, when you go and check your income statement, you will see that breakdown. They were careful enough to give us that breakdown. I mean, how did I get here? Let's look at the income statement. In the income statement, they now broke it down. So what they put as 8.1 here, they said income tax expense, deferred tax, and then tax attributable to investment income. This tax attributable to investment income probably is coming from share of associates, but they had already mentioned here that this one is after tax. I don't know if it's an error on their part, but I don't care. What I know is this. This is the tax expense that you charged, 8,100. And I expect that this increase in tax expense, I mean, this tax expense would have cost increase on my income tax liability. So therefore, what I would do is to say I expected this to have increased my balance. However you divide it, deferred or current or whatsoever. Okay. Then also picking up on that of supermarket. You come down here, you see that of supermarket. They have their own income tax, 255. All right. And then this is the balance we should have. But instead, this is the balance we have. Now, this reduction from this balance to this must have come from the fact that we paid tax. So that's that work back. Is it clear now?
Okay, so we
Is it
had
clear?
the tax we had was 4,625. So it's as a
Yes.
reduction that the tax was paid 12,000, right?
No. Tax paid is not 12,000. Try and understand what I'm saying. This is your movement in the year.
Okay.
When it comes to tax, your movement should be in your income statement. We have gone there. We saw that the income tax expense that was charged was 8,100. Okay, now they gave us the breakdown of the assets and liabilities of supermarkets, the company that we have just acquired in the current year. All right, part of their liabilities that we acquired is their own income tax too for that period when we acquired them. Their income tax liability was 255. So those are the two things I'm going to add, and my balance should have been 12,005. But when I look at the breakdown of my tax liabilities, I am seeing deferred tax 6930, and I am seeing deferred tax 450. Let me show you. Deferred tax was 450 in the SOFP. I'm seeing deferred tax 450 here, and then I'm seeing income tax 6930. So I added the two, and the balance is 7,380. So how did we move from what should have been our balance 12,005 down to 7,380? The only explanation we can possibly have for that is that we must have paid tax, and that would have reduced our tax liability. Is it clear now?
Absolutely clear. Thank you.
Thank you very much. All right. Okay, let's move on. So at this level, I can say that I have my cash flows from operating activity. So I can say net cash flows from operating activities. All right. My mind is telling me something. Uh, it's very common that, because I've looked at it, solutions from Pathfinder, very common that they will treat interest paid here. Okay, maybe for that purpose, I should just do interest paid here. Do you understand? Let's do it just so that we are in sync with. But ordinarily in practice, I don't treat interest paid here. I like to take it to financing activity, most especially um most especially when I know, I am very sure that this interest paid here is coming from an activity like loan. So because loan is a financing activity, and the interest you are paying, the argument is for people that do interest paid on operating activity is also valid. They will tell you that they are treating it as operating activity because we expect that it is from your operations that you will generate the cash that you are going to use to pay that interest. All right, it's fine. My own argument is that that activity is coming from loan, and loan is a financing activity. So therefore, we should treat it as a financing activity. But you are not going to be penalized whichever way you do. But to just be on its side, because I did the same thing for FR yesterday, and I had a rethink about it, but I was still adamant. No problem. We can do it. We can do it here. Let's look at interest expense. The interest expense. Okay. We have interest expense here. Let's look at the current liabilities we have. Interest expense brought forward, balance brought forward. Our liability is 450. All right. Now, our POL. Our POL gave us an interest expense of how much? Our POL said interest expense is 2,250. Okay. But now let's come down here. Let's come down here where we have something on finance costs. They said loan notes were issued at a discount in 2019, and the carrying amount of the loan notes as at December 31st, 2019 included 600,000, representing the finance cost attributable to the discount. All right. Now, this 600,000, I'm going to make that deduction from our finance cost, this interest expense. And why am I doing that? Is that I'm going to treat, it's coming from here. This is the loan note that they are referring to. All right. That's the loan note they are referring to there. And then this is the accrued interest and finance charges I'm talking about. So they are saying that 600,000 is included in that balance. All right. So I'll treat it separately. I'll make that deduction. I'll say my expense should have been 2,250 minus that 600. All right. 2,250 minus 600 will give us 1,650. All right. 1,650. By doing this, my my interest liability should have been 2,100. But at the end of the day, my balance carried forward was an amount 600. Okay. So what would have reduced this must be that I paid part of my interest obligation. All right. Minus this 600, and then we have this amount. I think what I should do, I'm sending out this solution to you. So what I would do is to just, maybe before I send it, I may have a relook, is to ensure that these things that we walked back to are in bold so that you know that that was what we did. Interest paid was 1.5. Okay. So this net cash flow should also include this. Okay. All right. Now we are done with net cash flows generated when it is a positive amount. You say generated from the activities, generated from operating activities. Now, where I need to be careful now, I'm getting to where we have the big guns. When I say where we have the big guns, I mean where we have specialized transactions that are different from the normal cash flow treatments that I used to. Okay, so cash flows from investing activities. All right,
Excuse me,
now
sir.
go ahead. I'm listening to you.
Okay, please, this calculation for this operating activities, we are getting a different answer. Because after adding that, under this addition, this 25,650 should be what we got. And then changes in working capital should be deducted to get the next value. But it seems you now added up everything.
Let me get you.
From this 25,650, before the changes in capital,
Okay.
this should be the
Okay.
total of this. It's as if you now added other things too.
Okay. Wait, hold on. Hold on. What did I do to get this 31? Oh, I went back again. Sorry. I get what you're saying now. We already have a total. Thank you. We already have a total here. So should be plus since I already have minus there. All right. Okay. I think I get it now. Is it okay now? Yeah, it is. It should be. This is in bold now, so that when you're looking at the solution, you can see what we did there. All right. Cash flows from investing activities. All right. We have financial assets. I must not forget that one. Income received from financial assets. All right. That's an investment we must have made. Maybe we bought equities of another company, for instance, or we bought bonds. We invested in bonds, we invested, so whatever we have there. How much was it? Before I forget, let me quickly bring it back. It will have no effect per se because we have just taken it away from operating activities and brought it to investing activities. Where is it? That income statement. Yeah, it was 3,000. So my memory did not fail me there. It was 3,000. Okay. Now let's move on to other investing activities. I have said your investing activities, don't bother yourself too much. Just go to your PPE or go to your non-current assets and go and look at the movement you have in your non-current assets. Now, I won't bother about goodwill. This goodwill is what they have broken down for us. That's this whole breakdown, this whole breakdown you see here, this is the goodwill there. All right. All the current assets, the cash we paid, the consideration we paid, everything that leads to that goodwill is what they have broken down for us. And we have been making use of the items. We've made use of inventory there. We've taken trade receivables there. We've taken trade payables there, we've taken the income tax there. We're coming back to NCI now very soon. But before we go there, I'd like to treat PPE first. Okay. Now, my investment in associates. This one too, we're going to look at the dividend that we must have received from our investment in associates. Maybe we should even do that first. But not forgetting our PPE as well. This one, they already told us that this movement is not because of any disposal or any acquisition. So we have already treated the depreciation from this level. So I want us to treat the PPE aspect, all right? Treat the PPE, and then we treat goodwill. We're already treating goodwill one way or the other. I already mentioned that. And then we're going to treat this investment in associates. All right. Okay. Let's get it started. Now, which PPE we have? In PPE, we have treated accumulated depreciation. And they have already told us again that there was no disposal. So we're able to treat depreciation at the level of PPE. Now we need to treat PPE at the level of cost. Now at the level of cost, what could have caused a movement here is the common suspects, the regular suspects. There are three of them. There could be disposals. I mean, there are two of them rather. There could be disposals, all right, number one. Number two, there could be additions, all right. Those are the two things that are very common that you will see causing a movement on your PPE. Now, yesterday I solved the question for the FR students. It was an ACCA question, and we had revaluation. So if revaluation method is also used, so at the level of that cost, that thing they broke down there, revaluation could have entered. Now, typical solutions, they will do the carrying amount, they will do the movement at the level of the carrying amount. But I still went ahead to break it down and use that revaluation as affecting cost. You won't be penalized for that. The reason I did that is because as a tutor, I didn't want to move away from what I typically used to do. Now, look here. For this question, we have balance brought forward for PPE, 21,000. Balance brought forward for PPE, 21,000. All right. So we now have balance brought. Okay, before I go there, we have supermarkets. Before I forget, yeah, we have supermarkets. I remember when I was pointing out the items, I didn't point at PPE. So we have supermarkets 2475. Supermarkets 2475. Okay. Now, another thing I could have added, I can assume that this list that you have here, this lease obligation that you have here, this obligation is coming as a result of a non-current asset. And then they did not separate that asset when they were explaining my PPE for me. All right. So this asset, I won't just have a lease obligation. All right. I have a lease obligation mostly because I have acquired what is it called now? I have acquired a non-current asset. Okay, so if I want to do that, if I want to show my examiner that I really know what I'm doing, I may want to introduce leases here. But in introducing that leases, when I want to do that, I have to be careful. It means that I need to do another working for leases. Is this clear? Let me understand if it is clear. Because if I do it separately and I do leases separately, we will actually get back to the same balance. it's not a problem. However, the examiner may expect that since I didn't tell you what these leases came from in terms of the assets, I only told you of the obligation. I didn't tell you the asset. You should have known, or you should have assumed that that asset is under PP. Do you understand what I'm saying? My student, please let me know if you understand what I'm saying here. This lease obligation, I'm saying it did not come from heaven. It must have come as a result of a transaction. Okay, good. Somebody said yes. Now let's move on. So what we will do is this. Let's go to the question and pick out what is the lease obligation. Not forgetting that when we were dealing with current liabilities as well, we saw lease obligation there and we left it. We said we'll deal with it together. All right. Now the lease obligation you have there is 2,350 non-current, and then you have this 3,000 as current in 2018. So balance that was brought forward 2,350. Balance brought forward as well. I can put this non-current, and then I can put this as current. Amount is 3,000. Okay. Now, at the end of the year, at the end of the year, this balance brought forward was totaling 5,350. Now, balance brought forward by the end of the year, we had 10,650, and then we had 3,600. Let me just do that here. 10,350 and 3,600. Now put together, that should amount to how much? 10,350
1,006.
plus 3,600. Sorry, 10,650 plus 3,600. 14,250. All right. All right. So what's the difference here? The difference you have here is the additional lease. You have during the year. All right. So this would have been the additional lease you had during the year. So this is the amount we have here. All right. So we want to know, apart from this list, do we have any other transaction where you paid cash? All right. Do we have any other transaction where you paid cash? All right. Okay, now balance carried forward was how much for PP? The balance carried forward for PP in terms of the cost, I think I saw 45,000. Yeah, 45,000. So what's the difference between this and this? Or let me even do it the other way around. Let this be this minus this, so I can just make it straight. So this would have been cash paid for PP additions. All right. Okay, so our PP must have increased through leases and then the other part through cash. How did we get 14,250? So how we got the 14,250? I wrote, what did I write there? Coming. Our lease obligation was 10,650. Sorry, 10,650. So if you have 10,650 non-current, and then you had current of 3,600, you have 14,250. Is it clear? What did you say? Okay, good. Now let's move on. Time has been fast spent already. But I hope the time spent is for PPE addition. We are getting it. I'll look for more questions for us. We'll take that as an exam, as our test. That reminds me, I gave FR student assignment. Nobody has reached out. Okay. All right. This is clear. Now, I will go back there. Let me go back there. Let me see. We made mention of investment in under non-current assets. We made mention of investment in associates, right? Okay, we invested in associates, and we probably have received dividend. All right. Okay, this one is quite straightforward. All we expect that because we are using equity accounting, now balance brought forward should have been how much? 15,000. 15,000. Now share of profit. Let's look at our income statement. The share of profit from associate was 5,250. Okay. If you add that together, you have an amount 20,250. So how come our balance brought forward, carried forward, was, I think I saw 16.5 there, was 16.5. So what happened? All right. What must have happened was we must have deducted the dividend received. All right. So this should have been dividend received from associates. Dividend received. Now, because it's a received amount, it should not be in jacket. Instead, it should be without jacket. It's an inflow. All right. What other item do we have there under investing? Did we not leave anything behind? I want to hope we did not leave anything behind. All right. We made under goodwill. Yeah. We have goodwill because we made an investment in subsidiary. All right. We made an investment in subsidiary. So if we made an investment in subsidiary, we probably have had dividend received from our subsidiary as well. Let's look at it. Sorry. So, come in. Our acquisition was in okay. We had cash equivalent here of how much? All right. Okay, we have a net cash in this subsidiary that we are supposed to look at. Look at it. We we acquired this, all right, as part of, I think I mentioned this last 2 weeks. It's something that you must not forget to pay attention to as well. It's very easy to forget. It's another thing that is very easy to forget. Look at it. Your cash and cash equivalents that you acquired from Shawarma. Cash was 1,680. All right. The balance of cash consideration here is 210, meaning that the net cash on acquisition, net cash on acquisition of subsidiary. So I can come here and say note 11, net cash on acquisition, and say, all right, cash and cash equivalents acquired was 1,680. Now cash paid on acquisition was how much? 210. The difference between these two is how much? 1,470. All right. 1,470. Is this one clear? This one is, it's not that it is not, it is hard. The problem is just you must not forget to deal with this under investing activities. So it must be part of the things that you put as your to do before you move on. All right. So let's total this. This will be our net cash flows from investing activities. All right. Here it's a minus, so I'll call it net cash flows. I won't say generated, I'll say used in investing activities. Just get used to that nomenclature. They may not penalize you at this level though, but for practice, it's better. You will not see a financial statement where they will say, where you have minus and they will say generated. It won't come out like that. All right. So now let's look at financing activities. I've told you where we are going to see our financing activities. Okay, first of all, before we move on, have we dealt with everything here? There's still an outstanding item here, which is NCI. So that tells me, that informs me that, guy, you have not dealt with NCI. So what am I really dealing with NCI per se? I'm going to be dealing with the issue of the dividend that must have been paid to NCI. Now, another place I want to probably look at is, all right, ordinary shares. Do we have issuance? We must have had issuance at the point when we were acquiring these guys. Our consideration led us to an issuance. We'll look at that. All right. Also, we have non-current liabilities that we have not dealt with. We have dealt with lease obligation. It formed part of the PPE. All right. We have not dealt with this loan notes. Okay. We're going to deal with the loan notes now. We're going to deal with NCI as well. All right, I think NCI of the lot is the easiest. Let's start with NCI. Can say dividend paid to NCI, a subsidiary that paid NCI. All right. So number 12, dividend paid to NCI. All right. Now, in the subsidiary acquisition, we had valued NCI as how much? How much is our NCI? Let's look at that breakdown. We valued NCI at 9,945. All right. They must have had share of profit. That is what will move up the carrying amount of NCI. Share of profit of subsidiary. So we are going to see that in our income statement where they broke down the profit attributable to NCI. They told us it was 1,500. All right. Total that you say this is what their balance should be. All right. But when you look at the SOFP, what is the balance of NCI you have there? The balance is 1,725. All right. So I will say balance, however, that was brought forward was 1,725. Then it means these guys received dividend. That could have been the only reason. So we'll say dividend paid to SCI is this. All right. So the group, the subsidiary paid that dividend. All right. So we treat it as an outflow. Right. Okay. Let's quickly look at the loan notes as well. Number 13, loan notes. Now, this is time consuming because we are doing it together in class. All right. Let me plug this one. It's time consuming because we are taking it small. And the reason I'm also taking it carefully like this is also because of the fact that there are not many questions there and I want to move on. All right. So our loan notes balance brought forward was how much? Just stay with me. We'll wrap up very soon. 7,500. All right. 7,500.
Your line is breaking.
My line is breaking, K. Did you hear what I said? Can you hear me better now to start with? Can you all hear me better now? Am I still breaking?
I hear you, sir.
So is the output better for that person that said my line was breaking? All right. I hope so. If not, probably your network. All right, we'll move on. Now, remember that I deducted a 600 here when we were dealing with interest expense, finance cost. You remember this 600. Now, that 600 I deducted because it was particular to this loan note. All right. So now that is the expense. That's the interest expense that went to POL. If you remember very well, let me break it down again so that you don't mix it up. When we did finance cost there, we said it was 2,250. When we were treating interest expense, I told you that I'm going to deduct that 600 because it is particular to because it was particular to the loan note. So we used 1,650 here as the expense. The remainder of that expense is what I'm bringing down here now. So at the end of the day, the 600 plus 1,650 is the 2,250 that we have in our income statement. All right. Okay. Now, it means that my balance here should be 8,100. However, what do I have? I have 21,900. Then it means I must have taken new loans. If I have a reduced amount, I would say then it means I will pay part of the loan. Okay. So balance carried forward here was an amount 21,900. So the diff between these two is how much? 13,800. So this will be new loan notes. So we must have received cash when we got this new loan notes. So let me even pick it up like this. New loan notes. All right, let's look at the other activities that we must have had there. So we issued shares, right? I don't want to waste time here. We issued shares. We issued shares. How much shares did we issue? Um, let's look at that breakdown. Let's say we issued 2,640,000 shares. All right. And that amounted to 4,125,000. All right. Okay. Let's do the movement of our ordinary share capital. 14. Ordinary share capital. And let's see how much we actually received. And balance brought forward here was how much? Balance brought forward was 30,000 naira. Now don't forget that we issued shares, all right? What, how much? I'm coming. I want to see if there is a possibility that it was broken into. So they didn't give us any hint as to how much. Okay. Let me hold on. Let's look at how they define the equity. They said 25 kobo. 25 kobo. All right. Should I really do this breakdown? I'm thinking if it is necessary for me to do the breakdown or just match it together and move on. Okay, I think I should still be able to do it. We issued shares, right? Issued shares. Issued share capital was what, how much? We issued it to Shawarma 4125. That was what was there. Let me be sure I did not make transposition error. Am I going? 4125, right? Okay. Now that should mean that I'm not comfortable that you will get what I want to do. 4125. I'm sorry. How many shares were issued? 2,640,000. 2,640,000. Okay. Now, if you had issued them at 25 kobo, what we have here is how much? 6.6 million. Must have made a mistake. We can't have 6.6 million. So this is okay. All right. I added 10 before. So 660,000 naira. Okay. That will be the ordinary share capital element. Okay. Meaning that this, okay, sorry. This one is in thousand. So let me divide this by 1,000. 3465 should have been the element that is share premium. Do you understand this breakdown I've done? Is this clear?
No, sir.
All right. Okay, so what I'm saying is this. They issued number of shares issued. Number of shares. Let's do it like this. Number of shares issued. What did I press? All right. Number of shares issued was 2,640,000. All right. Again, I've added ones. I don't know why I like 26.4 million. Okay. Now, book price is how you are going to get the ordinary shares capital that was issued. So the ordinary share capital, hmm, that was issued would have been this number of shares multiplied by the 25 kobo. In case you are wondering, where did I see 25 kobo? The 25 kobo, you need to look at the ordinary share capital. How did they define it? They told you at 25 kobo. But you know that they would not have issued them at the book price. They would have issued it at the market price. Now, I don't need to know what the market price was. If I know my book price, then I can use that book price to calculate how much would have been my, what is it called now? My book value, right? Now, if I know my ordinary share capital, and what we received was an amount 4 million. This is in thousand. This was what we received. It means that the share premium part, this is what we issued, Jerry. The share premium part would have been this minus this. Is this clear now? Is this clear? If it's not clear, then I might have to put them together and solve at once. Because I've been thinking about it. Should I do the breakdown or should I do it together? Is this clear? If it is clear, no problem. We can move on. It's still not clear, or it's clear? Which one? Nobody's saying anything. Use the chat box in case. Is this clear or not? Before I move on, this is the total. All right. And this is how would we will get the ordinary share capital. How many shares did we issue? Multiply by the book price. And I said the book price usually will be stated, it will be defined on the SOFP. All right. Now, if that is the case, multiply the number of shares by the book price, and you have the ordinary share capital increase. That's the issued capital in terms of ordinary shares. Now, how much was the total? They gave us the total. So for me to know the premium aspect of it, all I needed to do was to minus from the total the ordinary share capital, and that's how I have the premium. Now, typically examination solutions, they will do it together. They will match the ordinary shares and the premium together. But I'm just thinking we can do a breakdown of things and then we later add it together after we've shown the breakdown. Are people hearing me at all?
It's clear, sir.
All right. I hope people are not sleeping on me. Let's quickly do 10. We must be done. All right. I think we started around 8. So 10 we have to be done. So now my ordinary share capital that was brought forward was how much? Was 59,100.
100.
59,100. Okay. So cash received cash received. It's not actually received because I don't know how to explain that. It was an exchange, must have been an exchange. We'll do okay, let me bring this down. We'll do this plus this. Now minus that from this. This is 24,975. All right. Now the share premium part. Not to waste time, balance brought forward was how much there? Balance brought forward was 31,425. 31,425. Okay, we said the issuance here is 3.465. I'll divide by 1,000 because I'm working with these numbers here. So issued share capital. All right. Total here is this amount. But at the end of it, the share premium account is 43,245. So 43,245. So I ask myself, what's the difference between these two? 8,000. So the total cash received would have been an amount this plus this. Somebody use the chat box. Share consideration. Thank you. Okay. I'm coming. I want to confirm something. Um, 43,245, 31,425. Sorry. Just want to be sure I picked the right amount. 31,425. 225. Correct. Correct. Okay. Why do they now have a different amount? Let me look at what they've done. Coming up. Cause this 11,820. But 3,245 minus 31,245. Coming. What did you say?
The total payment is 31,425, not 245.
Okay, 31,425. Coming. Forty-three, 43,245 minus 31,425. 11,820. All right. Okay. We had a movement of 11,820 there. Obviously, all of that is not accruing to the movement we had calculated here for share premium. I'm coming up. Just want to see something. All right. Okay, I see where the issue might also be coming from. I did the whole of the 4125 here instead of the 620. Share an issue should have been, oh, oh, they were linked all along. Okay, sorry. Total amount to receive must have been 412,500,000. Let me remove the formula there. Okay, so this one should have been this divided by this 1,000. All right. Yeah. So if you look at their solution, what they did was they modeled this together, ordinary share capital and share premium. All right. Now, what we have done is simply to break it down to see the cash consideration for ordinary share capital and the cash consideration for share premium. But because I linked the formula together, the whole amount came here. I'm just saying that now. All right. Now, is this clear? Is this clear? What we have done is, what was causing issue before was that I had 4125 here instead of the amount we calculated, which was 660. So I don't think there's much here. But if you are confused, this is the reason why I had to merry-go-round and merry-go-round. Because what we had here was tied to a formula, was tied to this 4125. But we've cleared that up now. So quickly, share consideration upon that share exchange will be that amount you have there. Can't even lie, I'm tired myself, but let's round it up. Now, what's the only one item left that we probably have not dealt with? We need to look at the retained earnings. From the retained earnings, we'll be able to find out how much they would have received, right? So quickly, how much the parents received in dividend, all right, or paid in dividend. Okay, let's see number 15, which is the last one, I guess. Let's look at their retained earnings. Retained earnings. Now, balance brought forward was an amount, how much? 37,500. Now, profit for the year that is attributable to the parents. You know, the profit attributable to the parents would include what the parent had made and the share of the profit coming from the subsidiary. All right. So that is 18,675. 18,675. So altogether, their retained earnings should have stood at 56,175. However, the balance that was brought forward, let me quickly put this, profit attributable parents, right? The balance that was carried forward rather was how much? How much was it on retained earnings? 51,675. They look alike. I most thought it was the same thing. Now, it's a reduced amount, meaning that we're going to assume that they paid, it was dividend paid instead. So come here and say dividend paid by parents. We did 45 minus 45. Have we treated everything? I think so. Yeah, I think so. Right. Okay. So what we have here will be sum of all this. Sum of everything you have here is how much? 45,375. Okay. And I said, now this one is positive, right? So I won't say used, I'll say generated from financing activities. Financing activities, all right? So at this point, we can say cash at the beginning or the beginning again of the year was how much? Um, Cash and cash equivalent was 27,300. All right. So let's start like this. Net cash flow. What did I put here? Sorry. Why did I put this on here? Sorry. Just some movements there I wanted to do it. So um our net cash flows for the year will be this plus this plus this. Sorry, this one I used generated. It should have been used in operating activities. Yeah. Let's see where we are. Um, at the beginning of the year, we had 27,300. So at the end, how much do we have? If we add these two together, we have 67,725, which is where's cash, okay? Which is exactly what we have here. So we are good. So cash at the end of the year. Now, if I were you, I will not say Shibi, they don't used to set it like that, like that. They will not set it. It's simple, it's easy. Just pay attention to all that needs to be done. Now, in the last class, I was trying to show us something with regards to movement. I went back to it and I came to the conclusion the reason that would not have worked is because I did not consider this movement here for the group cash flow. For a single entity, it's so easy to see those movements and analyze it. And in case your amount at the end of the day is not balancing, it's easy to go back. But for group, the reason why it's like that is because you have considered this movement. So if you are doing your line by line movement and you don't consider this one, you won't see those movements there. You won't be able to trace where the error is from. So it can be exhausting. So the best thing to do is to just follow up one by one. If I have done all my workings, I get to the end. I am your lecturer and I'm advising you, please. You get to the end, it did not balance. Please move on. That is what I will do. Exactly what I will do. I'll move on. If I have time, I'll come back to it. If I don't have extra time, I'll leave it like that. All right. That will be it. Do we have any questions before I leave the class? Do we have any questions whatsoever? Let me immediately copy all of this and send to you guys. Do we have any? If you do not have any question, that will be the end of the class. I'll see you most likely on Friday. I'm trying to set up a class between the FR and the CR students. We'll be looking at 3 standards together. And those 3 standards will be, sorry, 1 minute. Let me just save this. Somebody is in the chat box. Please recap on the 600,000 loan expense. All right. Okay, I'm going to come back to that now. Let me just ensure that this one is in a mode where I can send it out. All right, good. Now, if you go back to the question, they were particular about that 600,000. This is the additional information. They told us that, you have, I'm coming, you have a line here, this line here. This line is taking care of the accrued interest and finance charges, Abby. But then you also have loan notes. You also have loan notes here. So that additional information number 3 is now telling you that 600,000 part of your finance cost, 600,000 is attributable to loan notes. It's not here. It's not in your interest. It's not on this line. I don't know if you get what I'm saying. It's not here. It's not inside this place. This is where it is. However, in your P&L, you will add all your finance costs together. Abi? So the finance cost you are seeing in your income statement, this 2,250, where is it? This interest expense, 2,250. There is an element from here, and there's another element from loan notes. So what we did when we were treating the interest paid was that we separated it. We said out of the 2,250, out of the 2,250, there is an element of it that is not part of this balance. I'm coming. It's not part of this balance. That 600 that they are referring to is not the 600. Don't mistake it. I almost thought that too. They are not together. So they are trying to tell you specifically that 600 is part of the loan notes. So when I want to treat that 600, when I want to do my movement there, I should treat that 600 as the expense, the finance cost for that loan note. It is not part of this accrued interest, or what do they call it? Accrued interest and finance charges. It's not part of it. Do you understand? It's not part of it. So don't treat it together. However, when we were dealing with it, we were making adjustments. Yeah, I don't need to break it down at this level. I can do without break. Everything will still be 2,250. But when I'm analyzing my movement, I would need to show that 600 under the loan note, which is why you find it on, where did I do loan notes? You find it as interest expense. Yeah. So our interest expense is split into two. There is an element that is part of the accrued interest and finance charges, and now there's another element that is part of the loan note. That was the reason for that additional information. So is it clear now? Is it clear? All right.
Yeah.
All right, thank you. Any other question? Let me send it to my personal mail.
This dividend paid by parents, how do you get it, sir? That of 4-5.
Now, that one is quite easy. You are looking at it from the angle of the group retained earnings. But let me put it there. This is the group retained earnings, right? Now that group retained earnings, there's a movement there. So we are trying to use it to know what must have happened. We said we had a balance brought forward, 37.5. Abby, this is the balance brought forward. Where is equity? Okay, yeah. 37.5. Now, what should cause my retained earnings to increase actually is the profit. Abi? Now, the profits that will come, we have been doing consolidation for a while now, so it shouldn't surprise you that the profit element here that you see in this retained earnings is that of the parents. So the profit element you will see there is the profit attributable to the parents, which they would have separated here at this level, 18,675. So that's what you see here, 18,675. Meaning that if that is the only thing that caused movement, my balance should be this addition, the addition of these two. All right, but that is not the balance. The balance is rather 51,675, a reduced amount. So one could have possibly reduced our, what is it called, our our group retained earnings. It must have been that we made a payment out of there, and that payment will be to the owners of our parents. All right, which is 4,500. The difference that you have there, is it clear?
Yes, thank you.
All right. Any other question before we go? All right. I'll give us more questions. One or two questions as test. I'll give you maybe till Friday to submit. You should expect it latest tomorrow. Please and please, I'm begging you. My number is on the WhatsApp group. In case I forget, somebody in this class should please remind me. Let me pick somebody to remind me. I'm going to pick Pascal. Pascal. Please, I beg you, remind me in case I forget. All right. Thank you, everybody. At this point, at this junction, we have come to the end of the class. I'll see you by the special grace of God on Friday, because I intend to do IAS 33 together with the FR students. There will be no need for me to do one session with another session with. The standard is the same. All right. Any other question? All right. Tintin, any other question?